Ladies and gentlemen, good day and welcome to the Xelpmoc Design and Tech Limited Q4 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravi Udeshi from EY. Thank you, and over to you, sir.
Thank you, Faizan. Good evening to all of you. Welcome to the Q4 FY22 earnings conference call of Xelpmoc Design and Tech Limited. We have sent you the press release and the presentation, and they have also been uploaded on the website as well as on the stock exchanges. In case anyone does not have a copy of the same, please do write to us. To discuss the results and the outlook for the future going forward, we have with us today the top management of Xelpmoc, represented by Mr. Sandeepan Chattopadhyay, Managing Director and CEO, Mr. Srinivas Kura, CFO, Mr. Madhu Pumalil, Group President, Strategic Initiatives, and Mr. Srinivas Kolipara, Group President, Startup Ventures. Before we start the call, I would just like to remind you of that the safe harbor clause applies. And with that said, I would now like to hand over the call to Mr. Srinivas Kura. Over to you, sir.
Thank you, Ravi. Good evening, everyone. Welcome to Xelpmoc's earnings call for Q4 and FY22. I hope you and your family are doing well. I am pleased to inform that we have maintained our business momentum while focusing on sustainability of operations. We continue to move ahead with our execution plan, which is centered on identifying the target sector that correspond with our HEAL approach. Operating revenue for the quarter was 18.6 million as compared to 35.4 million in Q4 FY21 and 18.3 million in Q3 FY22. We saw a renewed interest from our clients, which led to a sequential revenue increase of 1.4%. Operating EBITDA adjusted for ESOP for the quarter was negative 44.2 million as compared to positive 5.5 million in Q4 FY21 and negative 12.2 million in Q3 FY22. I would like to give a context to the said EBITDA loss. We have seen a demand for onboarding manpower talented, especially in new technological skills, has increased drastically across the IT sector, resulting in increase in manpower costs. In some cases, we have seen by 2 to 3x in the past. Further, there was also a provision for bad and doubtful debts in respect of certain receivables. This outstanding is now fully provided for. Excluding the above mentioned, we are in line with our Q3 FY22 EBITDA. The net loss for the quarter was 49.5 million, partially due to 49.9 million of ESOP expenditure. This is in comparison to a net loss of 29.9 million in Q3 FY22 and net loss of 1.5 million in Q4 FY21. For the full year FY22, our operating revenue was 80.5 million as compared to 140.5 million in FY21. Regarding the change in revenue, as stated in our previous call, Xelpmoc is largely a startup focused rather than a service contract base. We had certain service contracts which got completed during the first half of the year, leading to the set revenue change. However, our revenue momentum has picked up in the second half and we expect the momentum to continue. Operating EBITDA adjusted for ESOP was negative 63.9 million compared to a positive 46.0 million for the reasons discussed above. The net loss for the year was 128.3 million compared to a profit of 40.8 million in FY21, partially on account of increased ESOP expenses of 82.4 million. Our team size is 91, including employees, interns, consultants, as compared to 77 in Q3 FY22. Till date, we have served 53 clients, and our sustained interaction with the client is funding for good performance. The fair value of our investment in portfolio companies stood at approximately 623.6 million as on 31st March 2022, as compared to 471.6 million on 31st March 2021. Our portfolio companies did well by embracing new opportunities. To start with Fortigo. Fortigo's ARR increased rapidly on the sequential quarter basis and crossed INR 100 crores in Q4, despite the third COVID wave. Further, SaaS solution for enterprise class transport management system trails commenced in Q4 and will be implemented in the near future. Based on the above, it expects that the first half of FY23 will experience an uptick of over H1 FY22 volumes. MIHOP. MIHOP is the AVA Auto SDK platform, has been upgraded with new interactive features and has added multiple regional languages as well. This has led to a 20x growth in revenue from the said SDK. Its next generation VIA platform has been launched, which has greater functionalities in terms of user insight, performance, and ease of use. MIHOP recorded a 3x growth in revenue in FY22, and its FY23 revenue is expected to increase over FY22 levels. Woovly. Woovly enables its 7.2 million users to shop socially with the help of about 28,000 content creators. Around 13,000 influencers create short video contents, resulting into 298 million video views per month. It has clocked a GMV ARR of about $9 million USD, which has doubled in Q4 FY22 on a sequential quarter-on-quarter basis. A substantial portion of this has translated into revenue and is seeing a good traction in the coming quarters. TSIM, the other portfolio company, TSIM is Starring Me, is a global career advance platform for women and a diversity partner for organizations. It has increased traction by signing a large global companies as its clients. TSIM saw a significant revenue momentum in FY22, which is continuing in FY23 as well. Pencil, a brand of 1.6 Technology Private Limited. Pencil helps writers become author and sell their books as an ebook and a paperback globally via its technology platform. Its technology enables writers to write better using AI and ML, get their stories scored, and sell to OTT platforms and studios. It has seen 30,000 sign up on its platform. Its monthly user base has seen 20% user growth on a month-on-month basis over past year, and now it has a community of about 23,000 writers and readers. This platform has enabled publishing of 1,000 books within a year of its launch. Further, 10,000 pieces of content has already been published in 65 plus languages across 20 plus countries, and this traction is expected to continue in the future. Coming to our subsidiaries, Signal Analytics Private Limited, a majority-owned subsidiary of the company, has invested in Soultrack Studios Private Limited, which is engaged in content creation. Signal now holds 54.75 in Soultrack. Both the businesses are expected to work together and develop synergies. This is a significant event post the balance sheet date. Our board has approved investment into Accelerated Learning EduTech Private Limited, also known as SOUL, School of Accelerated Learning, to an extent of 14% on a fully diluted basis. 3% is issued again as a cash consideration, and the balance is for the advisory services. SOUL is an upskilling startup that designs and runs cohort-based courses which help students kickstart their career in engineering and design, irrespective of the background. My colleague Srinivas Kolipara can brief you about the startup during Q&A session. Now let me come to outlook for the fiscal 2023. We see this year promising growth in our portfolio companies, given that they are focusing on unaddressed areas of the economy. We expect our investment, including in Fortigo, MIHOP, Woovly, Signal, or Pencil, to expand their axis and reach and enter the next generation of growth. Our dual focus on our startup as well as our services segment make us fairly confident of EBITDA level profitability in FY23. With this, now I request Ravi to open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use headsets when asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and one at this time. The first question is from the line of Abhishek Anand, individual investor. Please go ahead.
Yeah. Hi. Yeah. Can you hear me? Hello.
Yeah, we can hear you.
Yeah. Thanks for this opportunity for directly speaking with you. So my first question is on the UK subsidiary. So were we received, in the manner which we had expected, were to be received in the UK? What were the first impressions, by the ecosystem, on our incorporation in the UK? So could you please throw some light on this one first, These are thesis basically the UK subsidiary is planning, is planning according to our plans.
So Madhu, why don't you take this question and explain the UK plans to him?
Sure, Sandy. Hi, Abhishek. So the plans for UK are progressing as planned. We started the entity there. We got done with the incorporation, and we took some time to get the bank accounts and all that in place, both on account of the COVID and the increased KYC processes. But suffice it to say that all of that is behind us, and now the entity is fully operational. We are in the process of hiring a senior personnel for the business development, and I think our plans for the next couple of months are very much in place.
So does it mean that we haven't yet started to take in some orders, right?
Yes, we are poised to take in more orders, and not just the orders, but we will be also we'll be replicating what we've been doing in India on the venture side. So we initiated dialogues with startup entities or groups of accelerators and the startup ecosystem in UK. And once we have our business development team in place, I think we'll be poised for the taking on clients, both on the services side and also looking at ventures, which essentially the portfolio firms.
And from when are we expecting to see some traction on these ones? From when are we starting to execute, any work, based from the UK subsidiary?
So as I mentioned,
two, three UK projects are already on way. Go on, Madhu. Sorry, I just wanted to mention that.
No, go ahead, Sam.
No, I said that 2-3 UK projects are already underway. We have started it by remotely doing it, but from the UK entity, direct approach-wise, we have not started. We are waiting for the right structure to come in, which Madhu, as he said, once that business development guy whom we are identifying, he comes and he owns up, then we want to hand it over to him. So there is no clumsiness in between.
Right, okay. Thanks for that explanation. And my second question is on signal analytics. So you did mention, you did commented on this one in the past, but in terms of, the elements of the value chain of EdTech, so which elements of these value chain are we addressing through signal analytics? I'm sure that, we are not trying to build up another Byju's, right? But we are doing...
No. We have clearly said that this is for peripheral education. You can go through the older Concalls and through the concept papers we have put in. But briefly to summarize again for you, broadly we are looking at intrinsic content by modernizing the content itself to use current technology elements instead of trying to insert a good looking video and say this is technology. Instead of that, using DHTML videos, using game engine based videos, those are the kind of things we are trying to explore. That's from the content exploration part of view. Then there we are trying to do something called a subscription business, which is a phygital element where we are tactile and technology work at a pace
that is a company we are looking for. We have some ideas. We have shortlisted some startups going. But the progression was first we'll do the content company, then we will look at the subscription company, and further on to two other elements of gaming and smart toys.
Okay, thanks for that. And one last thing on the products, so are we envisaging to also build up a revenue stream using our products, right? If yes, we have this.
So as I said before, we are looking at focusing on the products from third quarter of this year. So that would be on track. We had that from first quarter of this year, we would be focusing on making sure that our services part is set and running like a well-oiled machine. We have done that. We are on track for making it more stable, focusing on that. We have distributed work, and we will have that focus onto the products from third quarter.
And one last question on the products. So are we trying to, bank on the same products that we have, for instance, Xstack, and Expand, or are we going to come, from Q3 onwards with a different set of products?
It may be a mix of both. Please remember that these are component sets. We are not trying to make sure that it's like a off-the-shelf product for everyone. There could be a product like that, but right now these are more component stacks which are more developer-friendly or actually pretty appropriate for this no-code era that is coming. So I think we are going to hit it at the right time.
Right. Okay. So I was just wondering, from an outsider point of view, for instance, this Xstack, right, which is predominantly, you did mention in the website that it's for, deployment, elections, and etc. So I was wondering, why weren't we able to deploy this Xstack, so far? There has been a number of elections, which have already.
We have taken projects. We have taken projects of analysis of elections ourselves, and in that we have used this. That's how these products have come into being.
Right. Okay. But in terms of revenue from those,
yeah. But see, we are not trying to sell it as a product itself because that's a different journey. Right now, we are saying that this is the feature. If there are developers who are eager and keen, and that's one of cases. Mostly, it's our own internal usage as of now.
Right. Okay. Okay. So that's it for the time being. I'll go back and join in the queue for more questions.
Sure.
Thank you.
Thank you. The next question is from the line of Ishit Desai, individual investor. Please go ahead.
Yeah. Thank you, sir, for the opportunity. Mr. Sandeepan, I think you mentioned in the last call that some of the portfolio companies, startup portfolio companies, have reached to that level of 6-7 years of holding, where you probably look to start exploring exits in one of them. So, any progress on any of the portfolio companies? Any initiations we have done on that part?
Do you think this is the right time to do it now? I mean, everything has gone haywire. So I guess, again, as I said, we have to play it by the year. Things change, and that's exactly why we always refuse to put a line in the sand on time, because that's exactly the kind of dynamic nature that happens. But that's the reason we monitor core progress and what really matters for the startups and for us, which is revenue and how much we have stuck to plan. We got some money, we changed plans dynamically, we are back on track. That's what matters, how we are able to leverage resources and environmental opportunities the best way we can.
Understood. And so one extension on that question, right? I mean, since you mentioned not the best time to look at exits and all, what's the impact on our portfolio companies? I mean, the investor activity, of course, has dried. I mean, it's very much public, a lot of buzz around that. If we could really bifurcate into
fortunately
three buckets.
For us, fortunately for us, none of our startups are the burn types, right? So I don't think we are that badly affected. Mm-hmm. When a whole forest is on fire, not only the big trees, but even the bush get a bit of the flame, or the neighborhood also gets a bit of the burn from just the heat. So that will happen a bit. The general environment and sentiment will be down, and maybe there will be a resurgence of interest in these areas of funding. That could be the silver lining for this part. We don't know yet.
So
right now, people are in shock.
If we were to kind of bifurcate into three categories, right? So one is like companies which are looking Series B and above, like say Mihoop or Woobly, Fortigo, right? And second category.
It's not that simple. It's not that simple. It's also the category they are in. Correct? For example, I think, logistics and all will suddenly get renewed interest. Suddenly people will go off from SaaS and start saying, okay, logistics looks interesting. Deep tech will certainly be interesting, right? So, but at the same time, social tech may itself become taboo. So things can happen. So we have to judge by that. It's not about Series A or Series B. It's sorry.
Largely, if you look at there's no substantial impact on our portfolio company specifically in terms of activity tracked by investors or interest shown by investors. Broadly. We
have talked to each of the entrepreneurs post this debacle happening. I think they are well stashed for the moment, firstly. And secondly, the businesses are doing good. As long as that's happening, I think in any time when you are doing good business, money is never a problem.
Understood.
Valuations may be not up to your expectations and how the market thinks widely and all, and I'm never a person for that. It's about value and it's always about fairness.
Correct. And sir, there's a couple of new startups coming from our portfolio which are kind of about to hit the product side of it. One is Catalyst and another is First Sense. So if you could throw some light on how that very early traction is shaping up on that.
Pretty good. Catalyst actually has signed up few of its first customers already. So pretty good progress. We didn't expect customer onboarding so fast, but it's happening. So the product had a latent need and we are discovering that. So we're just trying to see, instead of going right away, we are probably saying that we're missing something and maybe there's a bigger market. So we are replanning and re-strategizing as to how to approach the market best. And I think what he had planned was from July, which somehow is good for the pharma industry. For some odd reason, he wants to go post middle of July with a full halt. So that's on the other one front. First Sense, we are doing a lot of pilots, which I think if you follow a lot of LinkedIn requirements of mine, I also sort of like it or something in their own posts, you would be aware. So we have put it into 2-3 colleges. We have tried it in some hospital in 2-3 different use cases. And there are some things in the pipeline which I can't discuss right now, which essentially will give us some interesting kind of performance-oriented POCs, where if the POC is successful, it means it's a contract. So we are working on some of those frameworks.
Understood, sir. And the last one on the signal analytics side. So you mentioned about the 4 pillars around which you are planning to work. So any timelines in terms of how we are going to roll out? What phase are we looking at?
I think everything together, we have a overall timeline. But see, again, we will wait for the right entrepreneur.
Okay.
That's the first requirement, right? But overall, we are looking at it dynamically. I think in a 0 to 21 month time frame, we have to make sure all these 4 are working in some way or the other. It may be that one of them is just in a nascency stage and someone is in maturity stage. But content was a good, we are always very clear that content has to be the first piece, because that sets your strategy, that sets your creative part of it very clearly. And that is how the harbinger of everything would be, right? And the second part was content is hopefully a very early cash cow. So we should be able to monetize content very fast from since we have started.
Understood, sir. And in your acquisition of Soltrex, sir, it mentions that the company has a turnover, doesn't have any turnover. When I was looking at referring their website, they already have a production house which is catering to certain clients. So is that the promoters are going to work on?
That's the studios. That's the studios. So that they are closing down.
Okay, they're closing.
They were a very good production house, but they didn't have the creative juice, right? So we are bringing that in because we needed execution people. We didn't have experience in that part. We didn't know how to operate an AV machine or do editing properly and all. These guys have that skill and they have immense creative talent. Once you give them the storyboard, they're superb. But they never tried the other part. So we are giving some time for that part. But as I said, I do believe we'll hit revenue very fast in this one.
So the money we have put in is for the production studios as well as this entrepreneurs, right? I mean, that's what.
It's the
Yeah,
value of the
so-
company. Srini?
So basically, just to address that, Soltrack Studios Private Limited is the entity where we are investing. Basically, this company was incorporated by the same founders like Soltrax Productions. And post incorporation of this entity, all the creative work which has been developed in Soltrax Production as bought back by this new entity. All the new creatives and the founders are going to be in this Soltrack Studios Private Limited, in which Signal has invested.
Understood, sir. Thank you. Thank you. This is clear. I'll come back in the queue, sir. Thank you.
Thank you. The next question is from the line of Yasesh, individual investor. Please go ahead.
Yeah, thank you. So we have mentioned that due to resignation of one of the director, we have decided to call off one of the investment proposals. So my question is that what was the rationale for investment in the first place? And as I can see about our latest acquisition, in Seoul, so even Mr. Srinivas Kolipara is one of the founders as well. So do we have the similar risk here as well?
So just to answer that, the one of the entity which is a Singapore entity where we are planning to take substantial stake, and where Suman Bose was also one of the majority shareholders. We were planning to build the innovation center for Singapore, etc. But now since Suman has taken up a job and is also working in the IT sector, there's a conflict of interest. That's the reason why we have called off that investment. Yes, and as far as the Seoul is concerned, in Seoul, Srinivas Kolipara is one of an individual investors holding a very minority share.
All right, noted. Also in Seoul,
we don't have risk in this.
All right, noted, sir. And as I can see, the expected completion date is mentioned as March 2025. So, I would like to know why would it take so long?
So basically, in case if you look at the stake which Xelpmoc picks up, majority 11% is coming for the advisory. So advisory is close to about 18 to 24 months. So over the period of time, these shares would be issued to Xelpmoc. So out of 14%, we are investing 3% in form of cash, and 3% would be issued upfront, and the balance would be issued in over the 9 installments.
Just to be clear, the product will be not finished, but it will keep being finished because it's already a live product. There are already customers. We'll keep on improving it. This is the engagement period for what we are calling the first phase, and that's what we have demarcated it. It's not like we are taking the product off the market and we'll come back again on 2025.
All right, noted, sir. Thank you.
Thank you. The next question is from the line of Kunal Dinesh, individual investor. Please go ahead. The line for the current participant has got disconnected. We'll move on to the next question from the line of Nilang Kovan, individual investor. Please go ahead. Mr. Nilang Kovan.
Yes, Mr. Sandeepan, this is Nilang Kovan. I have a question on the SAPL. On November, we declared that we diluted about close to 8%, but still in the latest report.
Can you repeat? You got a bit. Can you just repeat what you said? I missed what the topic you were saying.
Yeah, it was something we were not able to hear you.
In the SAPL, we said we have diluted the stake, but in the latest report, it is coming out as a wholly owned subsidiary.
So,
which one?
See, we have when we say wholly owned subsidiary, we have diluted about 8-9%, but still we hold majority 91%. So it was mentioned in that context.
That is fine, but even if that is the case, the proceeds of that dilution, it's not reflecting in the finance. Can you please kindly update? It's supposed to be around 5.
Whatever dilution we have received, whatever amount that we have received is the capital nature. So it's appearing in the share capital and on the reserves and surplus of the Signal balance sheet.
Okay, just to explain to you, if you are expecting that valuation to reflect on to Xelpmoc in the portfolio, that's not going to happen. A subsidiary is of a different nature where whatever money or whatever investment we have put in, our valuation stays locked at that till it has some other part, and or we say that we are not, it's not a subsidiary and we are having it as an equity onto that part.
So fair value of assets we are reporting only to the entities which is not an associate entity or which is not a subsidiary of Xelpmoc.
So to get the right thing, you have to actually.
The subsidiary is associate entity and subsidiary is always reported at cost, and it comes in consolidation.
So if you have to calculate the overall wealth of Xelp, then you have to actually go there and do the maths for each of the subsidiaries and then add it back.
If that is the case, it should have been reflected in the investor presentation that the current value of the SAPL should have been like close to 60 crore, right? That we don't see it.
No, that's the reason why what we are saying is as per the accounting standard, we are reporting our associate and subsidiary investment at cost. That is the reason why, in case.
No, what he is saying is that we can have one line saying the current valuation of this subsidiary is so and so. Maybe that's the point.
The current value, Mr. Sandeepan, the point is that there is a current valuation, but it was still showing it as a old numbers. It's not reflecting the new numbers. Say
in the Xelp balance sheet, it cannot.
So basically, in the value of portfolio slide, which is a slide number 22 in the investor deck, Signal Analytics Private Limited, I am showing a cost of investment as 10 lakh and fair value as on 31st March 22 as 10 lakh. The reason for this reflection is we are reporting subsidiaries at a cost only. We are not showing their fair market value.
Okay.
Rather, we cannot. Accounting law.
Yeah.
Okay. One appreciation goes to the brand name and the company name that has got incorporated. But there is one more thing which many of the investors have been asking for the last close to 9 months or more than a year. That is in terms of from thousands to a lakh or a crore. Why do we have some kind of a resistance changing the numbering format? Or is it that we don't want to?
Not the question. No, it's not the question of resistance. Even when we spoke to auditors, etc., they were more comfortable in reporting numbers in this particular format.
But the investors are not okay, right?
Since the revenue numbers and the cost side are on the lower side, maybe.
That's it here.
I'm sorry, you were fibbling. You were not audible. Can you repeat your question once again, please?
I have a basic question. Are we trying to satisfy the investor's request, or are we here to satisfy the auditor's request?
So whatever is the best practice as suggested by the financial consultants, we are going ahead with that.
I don't think so. If that is the case, why all the other companies?
We will take it up with them, and we will relook at it once again.
You know, this topic was there from last 1 year, close to about a year, but we are sticking on to that. And of course, I was holding on to this question for the last couple of months. I was holding it just because maybe in between of the year you don't want to change it. So that's the reason I was holding on to it. But while I see this is repeating even after the year-end closure, I supposed to ask this question on a little more harsher way. If that is the case, doesn't want to change it at all, then it has to be told to the investor we don't want to change it. That's how we operate. If you are interested, you stay, otherwise you get out.
So we heard you. We got your point. We will relook at it once again.
Thank you. I'll join back maybe later.
Yeah.
Thank you. We'll take the next question from the line of Kunal Dinesh Bihani, individual investor. Please go ahead.
Hi, good evening, sir. Am I audible?
Yes.
Okay.
Yeah, you can hear you.
Sure. So I have questions around the business and the financial side. So I'll go with the business part first. I'm joining the Concall after I think 2-3 quarters, so pardon if I missed something over there. Just wanted to check on the LMS platform. Is there a progress in terms of the number of schools we are approaching, or have we changed the strategy around that? That's question one.
No, I think that project has not really borne fruit. We had to abandon it.
Okay, fair enough. So except that one chain
platform is there, but at this point of time, schools are completely in a tizzy. They have no strategy. Till they settle down, it's not worth, because too much changes are coming and too frequently. It was not worth it. The product was going haywire. So we decided to take a break to let the schools settle down. Once they have done, then we'll go back again and stabilize situation. Then we'll make a stable product.
Okay, fair enough. My second question is around what is the share of the revenue which we get from our startup ecosystem companies where, we take equity or we support on a hybrid model versus the direct client which pay us for the work we do without any equity and all. If you can elaborate on that.
Srini?
So, right now, whatever revenues that we are receiving is largely there is no revenue share. It's more on upfront for whatever technology that we are building.
Okay.
What's the percentage between our portfolio companies and the outside world?
Correct. Yeah.
Portfolio companies and outside world, it would be the ratio of about 40-60.
40 being the outside world, right?
No, 40 being the 60 being the outside world. Please remember, the portfolio world is done at a very subsidized cost. So maybe 80% effort is going there, but your revenue will still be 40% of.
Okay, got it. Just a second. Fair enough. One thing, there is a lot of chatter around startup valuations, funding being dried up and all, and I think a couple of questions have been asked around it. Just one theme which I'm trying to understand, whatever startups which we are looking at as part of the larger ecosystem to work with or to invest in, do we have a view that we should wait out for some time to see if we can get a better valuation to invest at, or are we just going ahead with a plan depending on our progress?
We are going ahead, whenever we get a good entrepreneur, whenever we get a business we believe in, we will invest at what we consider fair value. We have never believed in this hyper valuation and all. Ours are not the rockets and the Spitfires. We have been stable, slow growing startups. We look at the 7-8 year horizon. So I don't think anything in our strategy changes, except for, of course, we have to be careful because the environment is pretty volatile, and whatever collateral damage can happen, we have to protect ourselves from that. But fundamentally, our ideologies, our businesses, I don't think fundamentally anything has changed just because of this, overhyped thing breaking up on its own.
Correct. No, the reason I'm asking is a lot of the fair value, whatever we put in our presentations or on our books, I don't know how the accounting works. Somewhere down the line, a lot of those companies are part of the ecosystem, right? We might have invested at a certain valuation. Let me just complete, sir, please. All I'm trying to understand is we also have portfolio companies where the fair value on accounting standards has been bumped up. Whether we agree or not, we are still part of the same ecosystem. Because as someone said, 80% of our effort goes towards those companies, even if we realize half the revenue. So that is my rationale of asking, right? Because end of the day,
your rationale is perfect. Please go ahead.
Yeah, so that is the reason my question for asking is valuations will matter because the valuations which are put right now, I am sure another quarter if, I don't know, nobody can predict. If the carnage goes on, depending on whatever, our fair value will also get bumped down. So when we look at new startups to deal with, is there a sense in terms of, I'm not saying to hold out for a quarter and all, but just trying to see, whether it will make sense financially. Technologically, I am not questioning on the financial side to get a better deal. That's all.
So let me point out fundamental beliefs, right? You saw a burnout in the stock market of certain types of startups which got listed, which went value, and then they completely went down, right? Stock market, everyone got affected. Fair enough. But even within that, a delivery IPO still went and on the first day gave a positive return to the company. So certain sectors, certain businesses, certain things which are making profit are probably going to get, and we believe that we have chosen those sort of non-glamorous, pretty sensible businesses, and hence we have a confidence. Now coming to your point of valuations and fair market valuation, yes, there are bump ups, but that's actually because we never bump up on our own. We in fact bump down when we believe that despite the valuation they have got, business is not doing well. We have gone ahead and bumped down. So you'll see bump down also. The bump downs are completely due to us. Trust me. But the bump ups are always due to an external financial event, not due to us. So it has always been happening over the last 7 years. Now it is coming into the limelight, but it has always been always an average checksum, and that will continue to happen. Some of the startups may suffer, though I think very few of our startups are susceptible to this carnage. But then, yes, as you said, it can drag to other sectors also just for the heck of it. No one can predict. I also can't. But again, the probability seems lower. That's all.
Correct. Fair enough. The point again. Just the last couple of questions. I see a steady sale by promoters quarter-on-quarter basis. So are we expecting this trend to continue? Because I'm just having a look.
What do you say? Steady sale by promoters?
In the promoter group,
only one.
No. So let me just.
Promoters have sold the stake except for 2 years back. That also one promoter because of a personal need.
No. Fair enough, sir. I am not questioning the nature. I am just asking. I think probably if I look at COVID lows of September, from a high of 58.17, we are at 54.25 at a promoter entity. For whatever reason, I am just saying,
That's because we diluted the whole company to get in about 27 crores, a 5% dilution.
There were two things which have happened. One is we have raised differential, we have issued differential allotment, and also there was ESOPs which were exercised every quarter-on-quarter basis. So as and when the grant which has been given and the employee exercises, additional shares are issued, so automatically promoter holding will come down.
So thank you. Thank you for correcting me over there. One last question. We have a revenue which is down 40 to 45% on a YOY basis. So if I just look at the year end, we have a revenue of 9.3 CR. Correct me if I am reading it right. The figure are in.
No, you're right.
Correct. On this base of 9.3, we have a bad debt plus doubtful debt of around 3.5 CR, 3.6 CR. That figure looks relatively high to me, given the base. I mean, on a 9 to 10 CR base, we have a bad debt plus doubtful debt, which I'm assuming is all part of the same revenue of around 3.6 CR. That's around 30% of the revenue. Am I looking at this right?
Basically, basically just to highlight on this doubtful debt, like majority is coming from one entity where we have done a services contract, and it is not that just coming from this financial year. Certain services which are being rendered in 2021, and in case if anybody who does not pay within a period of 9 months, even though we believe that still we can reward, as a good practice, we go and provide for doubtful debts. So on account of that, you are seeing that this bump up in doubtful debts.
Okay, that you are saying is for the 2.1 CR, right? The doubtful debt.
Yeah, and there were also one intangibles which we were created, and those intangibles were developed before COVID, especially for a couple of restaurants. But we have seen during this pandemic what happens. The complete restaurant as a business has taken a different model also. So even those intangibles which were work in progress, even we have written off those intangibles as well.
Okay, fair enough. So just one last thing on the doubtful debt. Do you think there is a chance of recovery or settling it midway during this current financial year, or will this be spilling over?
No, absolutely. There are fair chances of recovery, but what I said, as a good practice, we started providing in case if it is not received, even though we had a meetings in a day, in last 1 week or 2 weeks, but still we go ahead and provide for doubtful debts. As and when recovered, we will convert that.
Fair enough. Okay. Thank you so much, sir. Thank you for taking the questions. Yeah.
Thank you. The next question is from the line of Rudresh Kalyani, individual investor. Please go ahead.
Good evening. Am I audible?
Yes, sir.
Yeah.
Yes, we can hear you.
Yeah. For one of the previous question, we said that we will be investing in branches in 9 installment until 2025. So do we have milestone check for that, or how is that? When will you invest?
So basically, no, it is not a milestone check. So as I said that we are picking up 14% CCPS in the sole entity. Out of that, 6% would be allotted upfront on signing up or within about 15 to 20 days of signing up the SHA. The rest, balance 8% would be issued over the period of 9 installments. Okay, and those are on a quarterly basis. Those are more on a timeline basis, not on a milestone basis.
Okay, thank you. And my next question is that you said that in the previous Concalls, you said that we will be minting revenue from the service sector. But now you are saying that we'll start generating revenue from the third quarter. What is the reason for that delay?
I just wanted to
No. I said we will focus on the products from third quarter. The revenue from services is on from first quarter. I think you misunderstood.
So you meant that from the first quarter we will see revenue generating from the service sector as well?
Yes.
Okay. And okay. My next question is, since we talked about the exit as well, so what is the management plan once we get the exit amount? Are we going to buy back the shares or dole out dividend or bonus?
No, we are not going to do any buyback or anything. We are going to reinvest that back into more creative stuff.
We will take it up with the board. We will debate, discuss in the board, and whatever board approves, we will follow accordingly. But yes, as a management, we will put forward our suggestions as well. So whatever board approves, we will go as per that.
Thank you. Mr. Kalyani, may we request that you return to the question queue for follow-up questions. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Ashish Malani, individual investor. Please go ahead.
Hello, am I audible?
Yes, sir.
Yep.
Yes, you're audible.
Okay, so my question is more on the lines of how we are looking to become at least self-sufficient in terms of financial basis, where at least even if you're not profitable, like the services part is more like oxygen that we need to live, but like we don't live for the oxygen. We are more looking to be partnering with other companies. So what is the timeline do you see where you think that we will be at a place where at least the company will be in a state where it is not going in losses?
Not only losses, we plan to turn around that and be self-sufficient within this financial year itself. I know it may sound like a tall claim, but I think we will do it. And post that, we want to see one tranche of the company moving like a normal software services company with its natural growth trajectory.
Okay, thank you for that. My second question is more around what you had mentioned earlier, that none of our companies are doing a lot of cash burn. But from what I understand, a couple of companies, particularly Woovly India, I think, had plans to raise money around mid-time this year, which right now is a bad time for investments. But how confident about your investment in the company, and do you see, are you confident that they have enough burn for the runway for at least next 6 months and can survive this next 6 to 12 months, even if in case?
Yeah, I think they can.
Okay.
I think they can. And secondly, the investors and all, we don't think some of the investors will back down if there is a bridge round needed in between or something.
Okay, thank you.
Thank you. The next question is from the line of Ishit Desai, individual investor. Please go ahead.
Yes, sir. So, sir, my follow-up question is on School of Accelerated Learning, the investment which we have made. Just back of the envelope calculation, the pre-money valuation, both cash component as well as services put together, works out to be roughly 36 crore. So, is that understanding correct?
Kohli, something that you should take up now.
Yes, your understanding is right on the valuation.
Perfect. Great. Thank you. And what specific value add is it going to come on Xelpmoc side, given that it's already a running product? So, I mean, it's a substantial chunk of advisory equity, right, which is being put in there, which the company which has already raised money from some of the investors. So, what value add are we going to bring to this company? Specifically, any discussions around that?
Sure. This is Srinivas. Maybe I can take this one.
Yes, please.
One of the things that we've realized that, as you've probably seen, I was a very early investor into this company when they literally had just started out. Very, very small. It was more encouraging them. But essentially it's this. Yes, they've raised money and yes, they've got a product that's working well. But the strength of Soul, especially with the team that we have here, is that it's not only technology, it's also the broad understanding of what's happening in the world and how can we expand their business model. And so they're looking to us not only to build out, much deeper technologies using the strengths that we have today, it's also about how do we get them new customers, how do we define new revenue streams that are potentially out there. There's many things that we believe we will add in value to them, and they're very clear that we add that value also.
Okay, understood. And sir, any specific update on Slate and Pencil? Because I see both Slate, I think our stake is diluted a bit, and Pencil, we have added some money. So are these part of fresh rounds, or have we invested independently to these companies?
So basically, to answer your question, if you look at Pencil also, like as and when we enter into any contract with the startups, the equity is allotted to us over the period of the contract. Now, in case of Pencil, the contract was for a period of 3 years. So every quarter they do allot some equity. That's the reason why you see an increase in stake as far as Pencil is concerned. And as far as the Slate is concerned, Slate, we have participated in one round of investment maybe last year, somewhere in the month of June, July.
Okay, but that was added by us solely, or it was a larger round we were part of?
Oh, no, it was a part of a round where everybody invested on a proportionate basis. It was sort of a bridge round.
Understood, sir. Okay, sir, and I'm done with my question. Just last suggestion. In our presentation on portfolio companies, I mean, we see the same set of content in terms of what companies are doing. If there is a possibility of adding any metrics around it, right, which Mr. Srini mentioned during the opening of the call, like Fortigo doing a growth URR, or Mehoop doing 3x in revenue. So is there any possibility of having either a separate presentation on portfolio companies or maybe basically
So basically what we can do is we can check with the portfolio companies. Whichever portfolio company is comfortable, maybe we can keep on updating their decks on our website itself. So that we can
Correct. Because most of these companies actually would be sharing quarterly or monthly updates with most of their investors, and I'm sure you would also be a part of it. So whatever on best,
we are a part of it, but we also want to respect their stealth. Sometimes they're too close to something. They don't want that to be known in the full market. So we essentially do a little bit of a communication filtering onto that part.
I understand, sir. I understand. But whatever on best FFB, whatever is possible, if it can be communicated more.
Yeah, that's what Srini said, that whatever they agree to, we'll put it up.
Thank you, sir. Thank you. Thanks a lot.
Thank you. The next question is from the line of Ankur from RIL. Please go ahead.
Yeah, actually, my question is that our focus on HEAL scheme. But do you have any exposure currently to agricultural sector?
We have one of our startups which is doing steady job in Bengal, and post that we have been more or less waiting because we learned certain things because of our exposure to the government sector for the first time. And the next batch we will probably be doing maybe in a year or so. Not now at the moment.
Yeah. Okay. Thank you.
Thank you. The next question is from the line of Nilang Govin, individual investor. Please go ahead.
Mr. Sandeepan, we released a press release on the UK Prime Minister visit, right? The investment of about 3.5 crore. So could you please throw some light on what is the timeline which we are planning in? And I also understand there is about 100 people employment opportunity. So would like to know about a little more about that on the timelines. Thanks.
Yeah, Madhu, your question, Madhu.
Yeah, I'm here. Hi. So the investment amount that we had declared to the UK government is spread over a 3-year period. That's the initial amount for the investment for starting the operation. Unfortunately, has been misrepresented. We had mentioned very clearly that we would be hiring the pre-sales and sales by end of this calendar year, which would be about close to about 10 employees, and then eventually we will build our teams. So that's just to clarify on the numbers.
Are we talking about still the $3.5 million? If so, what is the timeline?
That's spread over a period of 3 years.
Oh, okay. That information was not very clear on the news release, so I thought I'll get it clarified here. Thanks.
Yeah.
But I do have a question. While we talk about say the 3.5 million, that is approximately 27-28 crore. But whatever the money left with us or the new fund which we got, that amount itself is only about the same amount, right? So are we confident that we want to invest all that funds got raised? We will be investing in the UK market then?
So why are you assuming that in 3 years we'll not have other sources of funds?
I don't have a doubt, but this is just to clarify.
See, it's a 3-year part. That's the kind of requirement it is there to make a substantial business. Now, whether the business funds itself or not, we don't know. If the business in UK does very well, the profits itself may be put in those money. This is the kind of expansion cost that we have to put in to make the business substantial. So how we resource the funds and all those things, that we'll do it. For the moment, we had allocated a significant chunk of the money we had raised for overseas allocation. That has been allocated. And that roughly is about, I guess, 40% of the said amount. So the remaining 60% should come in due time.
Okay. Thanks.
Sorry, Madhu, please add.
Thanks for stepping in there. I think that about answers what we have.
And wherever required, we can raise funds through Xelpmoc. Again, all this, whatever we are narrating is subject to our board approval, or we may raise funds from a third party directly into the UK.
Okay. I do have a question on, sorry.
Hello?
Sorry. Yeah, that's
Hello?
it. Thanks. Bye.
Go ahead.
No, take your time. It's fine.
I forgot the question now in between the discussion.
No problem. You can reach out to us anytime. I think we are nearing the closing hours, but yeah, do reach out to us whenever you want.
Thank you.
See, we like to talk in this way. Please don't take it otherwise. Sometimes I know I interject and because I get excited. These are the questions we like because these are strategic in nature. These are also things that we cannot disclose, but if someone asks, we can answer. So it makes us feel happy.
Thank you. We'll move on to the next question from the line of Ishit Desai, individual investor. Please go ahead.
Yes, sir. Last question from my side. On the Snap Hunt, one of our portfolio companies, if you could throw some light on how it's raised its seed round, and then if there is any progress there.
So, right now, as you said, Snap is in HR. They have the corporates to provide the manpower using the bots, etc. So right now they are in process of raising funds, but they are still able to self-sustain on whatever cash that they have raised in the last one and a half year.
Understood, sir. Thank you. And in terms of business, it's shaping up decent, not just fundraise.
Yeah. I think that is a key part. The business is doing pretty good, and they have moved on to the big five or something pretty fast. So they are trying for more penetration and trying to go. So right now it's used for the top level recruitments only. They are trying to go a bit down. Of course, that has pricing elements and all in it. So they are trying to find that product market fit for the lower class also.
Perfect. Great. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you everyone for joining us. In case if you have any further queries, please do reach out to us. We will do our best to address them. And that's it from our side. Thank you once again for joining us.
Thanks everyone. Take care and stay safe.
Thank you. Ladies and gentlemen, on behalf of Xelpmoc Design and Tech Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.